Hey, what's up? Today is Tuesday, August 30th, and we have quite a few good stories today. I'm going to talk about Singapore with their digital assets. I'm going to talk about Brazil with their DeFi liquidity pool. I'm also going to discuss some stuff about Avalanche, check in on Bitcoin. Then I'm going to move into some real estate and talk about rental market, uh, how that's going if you're a renter, as well as specific markets. We talk about the national average, but what about where you live and where home prices might drop based on just the region you're in, not just the state you're in or the city you're in, but the specific region within the state, specific neighborhoods, who knows, but there's some cool stories to share. So I will jump right in. And the first story we have is Singapore. Looks like their central bank wants to foster digital assets, also restrict crypto speculation. So the central bank wants to promote a digital asset ecosystem, also restricting that aforementioned speculation, says their monetary authority of Singapore. That person insisted that it's not contradictory because he already made these opening remarks on Monday. Basically, he made an announcement to introduce products and policies to the financial services community. But while these digital assets, he's saying, use the blockchain, distributed ledger technology, and tokenization to allow anything of value to be represented in digital form and stored and exchanged on a ledger that keeps the immutable record of all transactions, that cryptocurrencies are just heavily speculated upon, he says, while their prices have nothing to do with the underlying economic value. So clearly not a fan of crypto. And to further it, he says, quote, cryptocurrencies have taken a life of their own outside of the distributed ledger, and this is the source of crypto world's problems, end quote. Not the most, positive, description of the world of cryptocurrency, but we do know a lot of these governments want to get their own central bank digital currencies, and who knows what will be in store for those in Singapore. Moving along to Brazil, they have a private bank selected by their central bank that's going to develop a DeFi liquidity pool. So the platform using blockchain and smart contracts will allow the custody and exchange of these tokens, such as stablecoins tied to the fiat dollar and other fiat currencies. The statement said they released on Friday. So the plan is to launch an asset tokenization platform that transforms traditional finance products into tokens and also offer crypto custody services for those customers. So several other projects, they say, were also announced by the central bank. One that's seeking to tokenize financial assets on the blockchain to decentralize credit risk among several creditors. So we know, credit scores and things like that are, or credit risk are of the utmost importance to a lot of people out there. Looking at CoinMarketCap, I talked yesterday about this whole kind of bizarre Ava Labs alleged deal he made with them to receive a decent amount of tokens in exchange for digging up dirt, I guess, or just data on other cryptos and crypto exchanges and whatever he could to basically create lawsuits, which would give him information to, private information, but they'd have to release per the lawsuit that they launched to get this information. So it's kind of confusing, but the Ava Labs CEO came out yesterday and was like, this is absolutely crazy. We're not involved in this whatsoever. When he made that statement, later on, late last night, early this morning, depending on where you're at, Ava jumped almost 13%. So it had dropped to a low on Monday, but early this morning, it jumped almost 13%. So this Crypto Leaks alleged that Ava Labs paid this firm to collect confidential information on rival companies, tacked them in these class action lawsuits that weren't really lawsuits. They were just ways to gather information. The founder of this law firm said that the Crypto Leaks report contains numerous unsourced false statements and illegally obtained highly edited video clips that are not presented with actual context. So this will be, I know they pumped today, but we'll see where this kind of leads. I mean, who knows? Obviously, it's illegal, legalities, the court system. We can't really comment on that till we know more. I never like to jump the gun to think anyone is guilty or innocent. Obviously, in the States, we innocent till proven guilty, but I don't even like to speculate till I get all the data that I can get before I form an opinion on that. So we'll see. At least with the traders, it sounds like they are siding with the Avalanche, their CEO, and the entire project. So we'll keep an eye on that as well. This is kind of an interesting story from Australia. An Australian crypto.com user was accidentally transferred $10.5 million. She's in Melbourne. And basically, they were, instead of transferring a refund, they entered the account number in the payment section and accidentally transferred a large sum of money, which again, 10.5 million is not nothing. 7 months later, the company crypto.com is now taking legal action against her and her sister after they realized this mistake, asked for the money back. And the sisters had said, like, look, we already spent some of this. So they discovered this late last year in an audit. And because they spent some of this money, it will be an interesting story to follow. But quite the error for that person or the system that well, it says, entered the wrong account number. So there you go. Could be very, I don't know if that person still has their job, but we will see where this kind of leads to, and how much he spent of it, we will find out. The eighth merge, we're all talking about that mid-September-ish range, but Vitalik did put this out today. The beacon chain hard fork is 100% September 6th. So he wants to make sure you update your clients by then. So you can see the merge is coming. It's set for September 6th, 2022. And then the merge, not the beacon chain hard fork, the merge will be sometime in that 10th to 20th of September. I'm looking at one last thing in the Bitcoin. I was going to see right now we're sort of in that weird spot where I think, we touched under 20 a couple times, and the fear and greed was pretty low. For what it's worth, I will check in on that before we end here. Moving into some real estate, but also Singapore. There's a Singapore-based firm called PropSeller. So their strategy here is to take data and the hassle, they say, out of real estate transactions. They're saying that this is just a tedious, arduous process. And what their mission is to make them more efficient and data-driven for sellers and buyers alike. The platform claims to be able to tell users the likelihood of a conversion each step of the way. So far, it had a Series A funding round of 12 mil. It sets itself apart, saying with end-to-end real estate transaction platform as what it is. We have broken down every step of the process. Their CEO says, recording everything that happens. So we are able to record data that no one else has, identify how that process can be optimized to get the best results. And basically, they're revolutionizing the way we transact our homes in a more cost and time efficient way using tech and data. So it'd be interesting to see what they can do, but figured that was worth sharing. Moving on to some rents here. July rental report came out from realtor.com. Here's some of the key findings. Median listed rent, about $1,879 in the 50 U.S. metro cities. Increase of only $3 from June. Rent grew 12.3% from a year ago. The lowest year-over-year growth rate since August of last year. Rent's growing faster in these urban areas, almost 13%. Then suburban, but not that far behind, 11.7%, which is a reversal of the pandemic-induced trend. Buyers, renters, whoever might be more open to going back into the cities. Studio rents, continue to grow at a faster than 1 and 2 bedroom rents, especially in urban. That makes sense. Obviously, you're going to get a cheaper price for your studio. And then the rising cost of housing is the leading cause of financial strain among renters, obvious, and interest rates. I think the rising cost obviously encompasses the interest rates, even more than the cost of food or transportation. So Forbes put out an article saying, like, hey, is this the time if you're going to buy ever in New York City? Is it now? So basically, the market was simply adjusted to typical seasonal levels, with volume remaining above 2019 pre-pandemic year and the new benchmark for normal. Now in August, with a few months of data to analyze, safe to say Manhattan is stabilizing. In other words, it's not actively falling. It appears this might be the new normal. They break it down with 3 points. Number one is the 30-day pace of deal volume is stabilizing. That the measure of contracts is signed is currently holding steady in the mid 800s, suggesting perhaps the peak fear of this cycle was down during June and early July. And each day indicated a slowing pace each passing day. Since then, buyers appear to be cautiously stepping back into the market. And here's kind of a chart where you can see the 30-day contract sign pace from 2019 through July of this year, with the colors, low, basically, of each year. Number two, inventory pressures remain. So a lot of attention has been paid to the buy side activity. There's also a drop in new listings, right? And the number of listings removed. So while these drop in new listings is seasonal and they expect this, it keeps the pressure on the buyers to remove additional choices by removing additional choices from the market. So similar to the declining pace of new listings, the increased pace of listings removed from the market is seasonal and expect, obviously, but jumped 50%. The number of listings removed from May to June. Here's a chart of that. So you can see the strong negative pressure on supply from January of 2019 through July 2022. Number three, and the final one, negotiating leverage is stabilizing. So they're saying that it's necessary to understand the real-time balance of supply and demand, and they're looking at the ratio of contracts signed to active listings. They're calling that the market pulse. This measure has peaked in early 2022, began falling as the rising pace of active listings overshadowed the pace of contract signed. Recently, this measure appears to have broken its downtrend with a slight bounce as supply is now fading faster than deal volume. And then a final chart with that. So you can see that light bounce at the end for the market pulse. So again, this is courtesy of Urban Digs. And finally, CoreLogic put out this study here of the odds of a regional home price dropping over the coming years. So you can see very low to very high. And it's a specific region. You can see, a lot of Texas is very low. A lot of Florida is low. A lot of California is high to very high. New York, Pennsylvania, very high. Pacific Northwest, very high. I'll link the description to all these, and that's what I do in here, so you don't have to worry if I talk too fast or you miss something. I will link a link to any description of any article I source here, so you can read it at your own time. But I like to kind of break this down for you as quickly as possible, so you can kind of just watch and get what I feel are the most important stories of the day in crypto and real estate. So here's basically the analysis. So the U.S. home prices began observed several months ago, continued in June 22. Rose 18% on a year-over-year basis, right? And the market strength continues to be broadly based. All 20 cities recorded double-digit price increases for the 12 months ending in June. In 19 of 20 cases, June's reading was less than May's, showing the impact of deceleration at the regional level. We're seeing a lot in Florida, Tampa, the fastest growing city, Miami, right behind it, Dallas, Texas, right? So prices continued strongest in the Southeast and the South. So they're noticing that mortgage financing has become more expensive as the Fed ratchets up interest rates, and the process that continued as the June data was gathered. The macroeconomic environment continues to be challenging, and home prices may very well continue to decelerate. So that is my last story. Please like this video if you feel that crypto and real estate are two topics that are interesting to you. Crypto in the house that's exactly what I do, crypto and real estate. So I like to take half the show to cover each and give you the stories that I find the most important and worth sharing with you. So please hit me up in the comments, consider liking this video, subscribe to this channel. I do these streams every day. Would love to hear from you in the comments below, and see you back tomorrow if you can. So have a great rest of your Tuesday, and I